Good morning. How we doing? What's up, guys? All right. Another day back at it. Wednesday. All right. We have a little bit of news, business first, as usual. We got U.S. retail sales at 7:30. Industrial production hit about 8 minutes ago at 9:30 Central Time. So an hour after the bell, we get EIA crude oil inventories. And then we have a couple of Fed speakers. One at 11 Central, one at 12:30. That's pretty much it. So, all right. Good to be here today. Good morning, guys. How you doing? We are 6.5 minutes out from the opening bell. I'm excited. Hopefully we get some decent action here today. We got quite a move overnight. If you guys look, we got a move at about 3 a.m. About 300-point move, which in the middle of the night is pretty big. Here we are now fading that. So, see what we can get done here today. A little bit of a fade here into the opening bell. Does anyone know what happened at 3 a.m.? There must have been some kind of headline, huh? All right, let's see if we can get our music going. Peter, Chris, Brian. What's up, guys? How you guys doing? Keith, good morning. It's always good to see everybody every morning. All right, here we go. All right, 5 minutes out. So yesterday, man, quite the day yesterday. Not really. Yesterday, no trades on stream, which is just bizarre. That's not normal for me at all. And then later, I left. I came back in the afternoon. I just took two small-sized little scalps, and I ended the day break even. It was a very uneventful day yesterday, at least for me. How'd you guys do yesterday? Yesterday was kind of it was just a big tease all day. It did nothing. At least nothing that I could trade. It looked very range-bound in hindsight. I mean, I looked back and it looked like there would have been some things, but when you dug a little bit deeper, at least on my charts, like the 2-minute chart that I prefer to scalp off of, it was just a snooze. So hopefully we can fix that here today. Yesterday was kind of a below the curve day. I left after the bell just feeling kind of, I mean, I was just bored with the day. And I was done. Scott, pretty good day for me yesterday. Good. Glad someone had a good day. Chris, not good day yesterday. Chased a few and got hit on that news on one trade. Yeah, that was another thing we were seeing a lot of yesterday. It was tough. We were seeing not a lot of volatility. Little uneventful, like, hey, I'm almost going to give you a setup and then I'm going to pull it away. I got close to hitting the button probably 5 to 10 times on stream yesterday, and it just didn't give us anything. And then what would happen is we would get a news headline, and it would move 100 points out of absolutely nowhere. Unscheduled news, obviously. So yesterday was not one for the history books by any means, but hopefully we can get a little bit more action here today. Christopher, I just took a quick scalp to get trading day in for 8-day payout. Yeah, just a little flip. Scott, one loss but overall green, all small, managed risk. Christian, learn the hard way not to move stops. Please don't move your stops, especially with futures. When futures get trending, you don't want to be on the wrong side. It's just so much easier to take a paper cut than it is to just get hacked in half. Just take the paper cut. It's never worth it. And by the way, we've all done it, and it's never worth it. Eventually, you just get sick of getting, chopped up in half. It's not really getting chopped up. You're just going counter trend. John, ended the day green in 3 accounts yesterday. Good work, TC. Green across 3 accounts. Eric, good morning. Steam, good morning. All right, we are 2 minutes out here from the open, baby. Let's see what we can get. Make sure everything's set right here. Copy trader's all good to go. I think we are ready. Again, reminder, in a few of the accounts, so previously in 5 out of the 5? Yeah, 5 out of the 7 Apex funded accounts that I'm trading here, I was trading a single micro. I'm bumping that up to 2 micros in 2 of the accounts. I'm leading the leader as 1 micro just to keep the ratios right. I would take that 1 to 2, but it would mess up the ratios. I could fix it. It's just not worth doing right now. So I'll be trading 4 in the Take Profit Pros, 3 in 2 of the Apex accounts, 2 in 4 of the Apex accounts, and 1 in 1 of the Apex accounts. I think that puts my risk per trade at maybe like 17 or 1800 bucks. So we'll see what we can put together here today. Nice little downtrend here into the open. By the way, whether or not these trends sustain, in my experience, when you get a nice trend into the open like this, it's about a 50-50 shot, whether or not a move like this sustains. So a lot of people will say, we're getting a beautiful bear trend, where I'm bearish today coming in. If there's no news, now news changes things, but if there's no news, it's about a 50-50 shot. You just have to let the market open, let the institutional orders go through 5-10 minutes of that, and then take what the market gives you. Marshall, Savan, what's up, guys? Jim, old school, good morning, welcome back. All right, there we are, there's the bell. We'll dump off there into the open. All right, back testing the 20 on the 2-minute here. And these are going to be institutional orders. Very tough to trade this opening volatility. Very hard to have edge. You can trade it, obviously, and get lucky. But to have any kind of significant statistical edge, multiple percent or more, very, very tough. Because these orders, you have to keep in mind, I mean, think about it. The institutional orders, they're thinking 3 days, a week, 3 weeks, 2 months out. It's not necessarily an intraday thought, so they might be bearish on the day, 55% maybe, and still be buying, building out a position for 6 weeks from now. So it's really tough to trade when your competition is 95% not today mentality. So let these clear. So I mean, see that big wick? It's just ridiculous volatility off the open. Not a big move necessarily, but interesting movement nonetheless. Again, news today is pretty uneventful. 9:30 EIA crude oil, 11 Fed speaker, 12:30 Powell is speaking. That's about it. Central time. Look at the daily here. This daily is just showing the New York session. Okay, so that is going to look different than if you're showing Globex as well. But obviously here, we have a bit of a gap. That has no obligation to fill day one, by the way. They tend to fill over time, but I think a lot of people come into a day like today and they're like, I'm going to buy for that gap fill. Zero obligation to do so, unless you get some kind of heavy continuation setup and you end up taking an intraday swing trade, and then you use that as maybe a target once you're deep in the money, fine. But to buy the open saying, that gap's going to fill, that's a 50-50. It's actually less than 50-50 because you're asking for it to not only be bullish, but you're asking for it to move hundreds of points in your favor. So, not a good trade in my opinion. Here we are testing the 20 EMA in the 5-minute. Let these orders get out of the way here and start developing something. Now, as far as volatility, I gotta say, I don't necessarily, I mean, look back at the daily here, bottom of your screen. You see that the market was just dead. Right, and then we got all that tariff volatility. And I gotta tell you, I think we're coming into another period of contracting volatility. I hate to say it. Not nearly as much maybe as 3 weeks ago. But I don't expect to see tariff volatility just miraculously return after what we saw yesterday. I mean, yesterday the range was the lowest we've seen in a couple of weeks, at least for the New York sessions. So hopefully we get something. But honestly, that ATR up top, that blue flag, as we get more after the open bars averaging in, that's going to go up. But as long as that ATR stays between 25 and 70, I'm cool. Any more than that, it gets tough. Any less than that, it gets tough. Scooby, what's up? Good morning. Well, the market's holding off on that 5-minute 20 EMA. Here we are retesting the 20 on the 2. Flippity Plop is back. What's up? Good morning. Gibbs, Apex deal on 150k accounts is crazy right now, giving it a shot. Use code BIG. Yeah, the 50s are great. The 150s are great. The 300ks are great if you can pass the eval. Once you pass, the hard part about like the 250s and the 300s is passing the eval. But realistically, for me, when I run the math, I kind of feel like maybe the 250s are like the minimum for consistently scalping a full mini. The 300s, you get a little more comfortable with scalping a full mini. The 150s, you could push it. But, I mean, so many people, they trade like 3 minis on a 50k account, and they're taking 10, 15, 20 trades a day. I mean, to me, that's just... You run any basic statistical simulation, you're going to blow those babies before you get to a payout. 8 out of 10 times. So... Everyone trades too big. Everyone has too little accounts, and they trade too big per account. Or maybe they go 20, they just max it out to 20, and then they trade like 5 minis. It's crazy. Just take your time, trade small, per account, and then over time just scale the accounts. And by the way, guys, the fact that you all keep doing that, and everyone does that because they trade huge, and they're like, well, I'll just buy 3 accounts because it's cheap, right? And I'll trade 10 minis per account, and then I'll get a huge ROI. And then you end up getting no ROI. That mentality keeps props in business. I want you guys to understand that. And it's never going to stop, no matter how much I say it. So you might as well do it I hate to say the right way. There's a million ways to trade. But you might as well scale this horizontally, which is going to help you be more consistent and more sustainable, and get on the winning side of the business model. For a company like, for example, Apex to make all the money they do, if you've seen their their revenue that they release publicly, those files, Apex makes a lot of money. Okay, and in order for them to continue doing that, which obviously they would like to do, they have to have some winners and a lot of losers. But without winners, there's no more carrot to dangle. They go out of business. And without losers, they go under. It's a delicate balance, and the rules that they put in place helps them maintain that delicate balance. And the branding of like, hey, you can trade, you can trade 10 minis on this account, which is obviously way too big for like a 50K. That helps. Put the ego aside, trade the MNQ, trade 1 micro if you need to. It's gonna help you. Plenty of money to be made in micros, I promise you that. All right, here we are coming into getting closer to 840 territory. Institutional order starting to slow down a little bit. Getting upside through that 20 EMA on the 5-minute, by the way. Goose, did you take a trade yesterday? We had no trades on stream, which was just bizarre. I left, I came back in the afternoon, I explained this already. I took 2 tiny little micro trades and I ended the day like break even. So, uneventful, I walked away. Just kind of tired of it, of I really hate to use the word choppy, but I was just tired of the volatility. I sat here, finger on the button for hours. Oh. Giving me something, and then it would take it away. So I was just kind of done with yesterday. Sometimes those break-even days are kind of the worst, because by the end of the day, let me know if you guys feel the same way. I'm sure you do. And this never goes away, by the way. By the end of the day, and you're walking away and you're looking at the P&L and it's like break-even. It's like I'd almost rather have a red day, because you walk away after trading for hours, and it kind of just feels like those hours of your life were like removed, like cut out, because you don't, I mean, let's be honest, at the end of the trading day, you don't really remember most of the trade. At least I don't. I don't remember most of the trading day when I walk away, because I'm just locked in, I do what I do, I walk away, and it all kind of just like fades in short-term memory. I mean, which is part of the reason why recording it is so helpful. But like, that's really a frustrating part of break-even days that we just have to deal with as traders. It feels like you just wasted hours of your life, and that's just part of the game. You didn't, right? You showed up to work, you did your job, but it feels that way sometimes, and it's frustrating. But you can't let it pour over into taking bad trades. That's where you have to draw the line. Just accept that it's a weird thing in this industry where you can show up to work and feel like you did absolutely nothing, even though you did your job and just wasted hours of your life. It can feel that way, which is not really the case. I mean, maybe you feel that way about like a regular job, but at least you're generating consistent revenue while you're there because you're getting paid hourly or on a salary or whatever. Whereas here, you can walk away and have literally done nothing, but you didn't do nothing. You practiced. And getting those reps is going to help you actually generate a return on that time. It'll just come at a later date. So you have to remember that. All right, here we are, 841. Getting into territory where I can start looking for some setups here. Early signs here of a little ascending channel, so I'm going to keep an eye on that. We have 2 touch points, top and bottom. I'd call that 2. Now, if I were going to draw this here, we'll see if this gets a 3rd touch point. By the way, this is very aggressive. These aggressive channels, on average, tend to last not as long. We'll see if that gets a 3rd touch point to the downside is what I'm interested in here. I don't care too much about that that really aggressive ascending resistance. You have to time it just a little too perfectly. While we wait here, guys, please press like on the stream. Helps out a lot. Really does, seriously. All right, here we go. Let's see if we can get a test. Put you back down here of that downside. I'd love to see a little channel form early and then maybe have even the 20 EMAs on the 5 and the 2 lining up with that downside level, which we are actually seeing already. There's the test. See if we can get a nice clean bounce. It might be sloppy because that's so aggressive. So if you're just joining us, again, don't forget, Powell is speaking at 12:30 Central. So he's probably going to have a couple headlines about tariffs. So I would sit and wait around that time. Sloppy test there of that trend line, so see what develops. Steam. Lately, I've been utilizing a 100-point stop and a 10-point target. If you're trading prop, by the way, like Apex, for example, for everybody, that won't fly. They have a maximum of a 5-to-1 risk to reward. But in a personal account, you can make the numbers work any which way. As long as the win rate is very, very high on that strategy, you would obviously need a win rate in the 90s. All right, here we are getting a hard downside break. So we will remove this because it never actually truly formed and got a third touch point. We'll leave this guy here for now, and we'll see if we get some kind of downside continuation set up forming here for us. Big outsized bar. Wouldn't want to see this put in too many more points on this 2-minute bar, 25 seconds out till the rollover here. All right, range of 48 on that previous bar. So I am interested here in a continuation setup on this bar. If we can get a nice low close near the low of day. We'll see if the bulls can step aside here for a second. All right, 60 seconds out from the close of this bar. Forty seconds. I don't want to see it like shrinking too much, right? I don't want to see a small bear bar closing near the low. But it can't be 150 points, obviously. It needs to be reasonable. But still showing continued strength. 10 seconds. I'm ready, but here comes the rollover. Nothing. At least for me, nothing. All right, attempt at a reversal sequence here out of the bulls. Obviously, that doji we just put in told us that they're going to attempt something here. See if they can actually sustain that. Nico, can you describe again exactly what you're looking for with that rollover? Okay, so in a downtrend, 2 consecutive bear bars. In an uptrend, 2 consecutive bull bars. In a reversal sequence, 3 consecutive bear or bull bars. Growing or similar size, not shrinking is the headline there. And closing near the low on the entry bar with a thought process around stop hunting. It's a simple setup, but there's kind of a lot going on, to be honest with you, and it's somewhat discretionary. So the best way, I think, if you want to trade this way, which is fine, I don't care what you do, is to just watch. There's a lot of decision making that goes in. For example, if there is a continuation setup, but oh, wait a second, we're coming right in to a descending resistance in this bull trend. I'm sorry, an ascending resistance in this bull trend, like the top of a channel. I think, well, bears are going to see that, and they're going to gain confidence from that. So all I'm doing is I'm reading the price action and trying to determine, okay, with the most recent information we have, like minute to minute, what is second to second, really, what is the balance between the bears and the bulls telling me right now? And I want my enemy for that trade, so to speak, the bears or the bulls, to have completely shattered, if not greatly diminished confidence for that moment. I want them to be searching for something and find almost nothing. Now, always, they're going to be able to find something because people use a million different indicators for some reason. But based on actually what's real, which is price action and patterns, like trend lines, that algorithms will also find, I want them to be able to scrape, scratch around, and find basically nothing good and be completely disappointed. All right, here we go. I'm getting interested here. See if we can actually not wick back upside here on this bar. We get a push through the low. Shit, I'm getting different data between Ninja and Thinkorswim again here. There we go. I think it cleaned up now. All right, there is the breakthrough low of day, at least after the bell, right? So I'm now very interested to see how this bar closes for continuation. Bull's trying to bounce it up here. Now, by the way, to add on to what Eric asked about the continuation sequence, something that I get a lot is like, well, okay, but in this case, you'd be selling low, looking to buy back lower, right? wouldn't bulls get confidence from the price being lower? And it's like, yeah, that's fine, but they're going so counter trend that anyone buying in this sequence has been immediately disappointed. So there's always something the other side can find. Otherwise, we wouldn't have a market. If there was nothing, then there would be no one that I could sell the shares to go short, right? When I talk probabilities, it's 55, maybe 60% at best. I am not, with a 1-to-1 ratio, assuming, right? Just make the numbers easy. I'm not talking 98%. That's where a lot of newer traders go wrong. They make this assumption that anything is like, oh, that's like a 98% probability with a 1-to-1 ratio. Now, you could have that with a massively negative reward to risk, which is fine. Okay, I'm watching here to see if we can get a nice low close. 5 seconds out here from the rollover. I don't want to see any kind of wick back upside. Yeah, we held on to that wick. See, those bulls are still kind of stepping in here. All right, 1:05 out here on this 2-minute bar from the close. Bulls trying to wick that back upside. Let's see if they can kind of give up. Which could provide me an entry, right? $15 seconds here. Watching that bottom around 3 a.m. on the 5-minute as well. That bear is not showing any backbone. Bulls stepping in. You guys see that? Wicking back here. I'll show you this chart. Wicking back up inside of the previous bar's low. That tells a story. I'd really have to see it close down toward 25. Which then lets me stop hunt a little bit, but it's a little early in the, it'd be a little early in the trade for the stop hunting. I prefer to have the stop hunting more toward the back half of the profit target. It would be in the first half. I'd be okay with that. But bulls are wicking it back upside anyway. Let's see if they can finally lay down here, or if they trigger some kind of sequence. They're trying to with those shrinking bear bars, right? I mean, it tells us the balance is getting a little out of whack compared to previously. All right, I'm gonna get started on coffee. I'll be back in 2 minutes. All right, big ol' pushback downside here. Here's the 9 a.m. bar. When we see a bull bar step in, especially like the way we just saw it, here, up here shows you better. And then we see another outsized bear bar reclaiming the entire, like just swallowing all these bars whole. That, by the way, is not a continuation, because now we're looking at some kind of reversion thing happening, right? So I gotta wait for things to reset, or a channel to form, one or the other. Is that big bar just manipulation then? I don't know, could be. Listen, the fake headline we saw like a week ago, that was probably manipulation. That was probably heavily engineered and someone made a lot of money, got very rich, more likely, got much more wealthy than they already were, or some institution somewhere, engineering that fake headline that we saw last week about the tariffs. Or maybe, was that 2 weeks ago? I don't remember. But most people, like retail traders, who just cry manipulation constantly, it's some crybaby shit. Who knows? Just trade what the market gives you. People will look at a bar on screen and say, oh, that's manipulation. As if we know. Or they'll lose a trade and they'll say, I got manipulated out of it. Really? Really, the market cares about your 1 or 2 contracts. Come on. They don't. Let's see if we can get some kind of a sequence going here. 3 bull bars here, 1 closing near the high. All of a sudden, I care. So you can see here, I mean, what I start looking at here is you see this really aggressive downtrend. There's really not a channel because it's just bar after bar to the downside. And then the bulls start to get a little more confidence. And what happens is you start to widen up a little. I mean, this happens all the time. And then what you can see is a little descending channel where you can start taking limit order reversion scalps, or you just return into some kind of continuation sequence. So I'm watching both for development, paying attention to both. Minute 35 out here from the close of this 2 minute. All right, 60 seconds out. Now, I'm interested here in the 2 minute in continuation, but I have to keep an eye on that potential channel. Right, I want to make sure there's close to enough room. It doesn't have to be perfect, but I need to be able to categorize it as an ace setup. However, I know for a fact that you have a whole bunch of bears looking at this and saying, yeah, maybe I'll short that. That's a little channel for me, isn't it? I gotta be careful. I mean, if we saw this break through that and the bears really no longer had an argument, boom, that's an entry. But right here, if we roll over like right here, I know bears are gonna step in at least a little bit. We'll see if they take control of the balance, but they're gonna try, right, to see that as a channel. I mean, at least for a brief moment. Now, what it would take is bulls for me to be right if I were to take that rollover, to really heavily step in and push us through the EMAs. The 5 minute EMA is at 610, so it's out of the way. I mean, it would pretty much be a target for me if I had taken that, but I know that you're going to see a little bit of selling pressure just based on this. Now, that doesn't mean, by the way, when I say that, that does not mean that we're going to see the market go down. It means that in terms of the balance, how many sellers there are compared to how many buyers, the selling pressure slightly increases here in comparison, but we don't know how many buyers are going to be there. That's the point. It's just enough to make me not take that as continuation, though, because the bears have a little confidence given to them. All right, now if we can see another bull bar pushing up through the 20 EMA and closing, let's say coming into like 18.6. However, then you got this to consider. And then, by the way, this 20 on the 5, it tends to get looked at. It really does. It's not enough for me to take trades off of. I could never make trading just like an EMA on any time frame work if that was all I was looking at. I tried, didn't work. I could never get it to work. It's just not enough. But it's enough to deter me from a trade. All right, I'm gonna get ready here on this next bar. Here's what I'm watching. About 15 points away at the rollover is the 20 on the 5. All right, now with the current ATR in the mid 30s, I'm running 40 and 40 for my ratio. At least as my automated what goes out. Now, it doesn't mean it'll necessarily end up that, but that's the plan heading into each trade. So I don't want something to deal with that early in the trade. 15 points. All right, here we are 30 seconds out from the rollover of this 2-minute. Yeah. Okay, if we can see a nice growing bull bar up through the 20 on the 5, then I'm cool. Then I'm cool to take a continuation. However, we may end up seeing this turn into a wider descending range, and I still need to consider that. So I would need to see that idea get shot, which would require a growing bull bar. $60 seconds. You can see the 5-minute as well here. Really like 6:15. No, that'd even be kind of tight. Maybe 6:20 on the close. But bears are going to try a sequence here. Do these shrinking bull bars turning into little dojis here? There's the rollover. We're gonna do a little flat top here on the 2-minute. I'm watching that. Obviously, I wouldn't want to see that break. That would push us right into the 20 on the 5. You can see here. There's the attempted push through that little flat top. $6.15 is where I'd want to see a bar close. To buy the rollover for maybe some continuation here, but the bears, again, this is an attempt at a bear reversion sequence. You see big bull bars starting to shrink and then turning into dojis and then curling back over and attempting to reclaim a bottom wick. Right, I mean, you get the same thing to the long side as well. Now, the danger, by the way, this can be one of those earlier, lower probability, higher reward to risk because you're earlier in the setup. So your probability of being right is less, but your reward, if you're right, compared to your risk, is higher. But the risk here is that this just turns into a sideways chop. Which the beauty with futures, by the way, is you can still take that trade because there's no theta decay or IV crush. I gotta say, futures are a beautifully designed trading product, is really what they are. They're a trading product, a hedging product. Options are great. They just, there's little nuances that it just makes it a little bit tougher. You have to trade a little bit differently, because if there's risk of sideways, of getting trapped in sideways action, it can kill you. You can kill the trade. Okay, here we go. If we can see this nice little bear bar closing near its low and growing a little bit from where it currently stands in the next minute 15, then I become quite interested here. All right. All right, now stay put, bears. Don't dump off to 18,510 too quick here. I can't deal with outsized bars. We got enough of that yesterday. All right, 15 seconds. Come on, bears. Show us some backbone here. They lacked it all day yesterday. Both sides did, really. You're killing me. Nothing there, no trade. Big old wick back up at the last second. You guys see that? And that just would have been a beautiful entry. We wick back damn near half the bar. That'd be a rule break. I can't take that. What does that tell us? We're getting a nice low close. 2 seconds, last 2 seconds of the bar, which is arbitrary, by the way. It's just a time-based bar, but the last 2 seconds, based just ahead of my entry, boom, we shoot back upside. What does that tell me? It tells me at the time of my entry, yeah, sure, we might continue lower, okay? We're talking probabilities. At the time of my entry, look, the bulls just stepped back in. Is that really still a continuation trade? It was. 2 seconds later, it really wasn't. So you gotta be careful when those things happen. It's frustrating. We got so much of that yesterday. You had a great setup until the last 3 seconds, you know? So let's see if the bears can put something together for us here on this bar. All right, 40 seconds to clean this up. $12 seconds. I need to see a little bit more downside out of the bears here. Close near the low of this bar. We're currently inside the bottoming wick of the previous bar. That's nothing there. Old school, Nico, do you trade evals the same way? Yes, but I trade much bigger size and much more aggressively. Just because that's how my business plan needs to work. I can't, there's too much opportunity cost for me to spend a week, 2 weeks in an eval. Now, if I have to, like with Take Profit Trader, that's fine. But a Take Profit Trader account is, comparatively with same day payouts, and it's probably like a bigger asset, so that's okay. But with like Apex evals, I trade the same concepts, just more aggressively. You just have to figure out what your business model says about the cost of evals. It's just like with Apex, they're just too cheap. I mean, listen, early in your journey, they're not that cheap, okay? But when you're making more and more money and this is a profitable venture for you, let's be realistic here and just be straight up, because we're here to make money and talk about money. So when you're making more money, an Apex eval is so damn cheap, you cannot spend a week trying to pass the thing. In the early days, listen, you should. But long term, when you're profitable and making money, there's way too much opportunity cost to spend a week in a $30 eval. It's just too much. So yeah, I trade them far more aggressively. Here we go, getting a back test here of that 20 EMA at the 2 minute. So I'm still kind of thinking about this descending channel, right, that the bears might be looking at. However, we didn't get a lower low to make that a real channel. So now we're getting more like a wedge, which I'm more cool with fighting, because wedges are just inevitably going to break anyway. And I think everyone kind of realizes that. So when you get this kind of descending, or I mean like shrinking wedge like this, right? You would draw this, and instead of drawing something like this, which I guess you could draw it like this, but that's a pre-market level. Now you have to draw this. And now they're converging. It's like, well, it's going to break out anyway. So I can take a continuation inside of that if I need to. All right, coming into the 20 on the 5, still watching that area. This next bar for me could be my entry bar. If this bar right here turns into a nice sized bull bar closing near the high outside of these previous wicks, then boom, I buy the rollover. In a minute 50 from now. See if we can get that. All right, a minute and 7 seconds here. Get everything armed, ready to go. $40 seconds, I need to see a close above these wicks. Above 18,607-ish. $30 seconds. Bears are really holding on to that 20 EMA on the 5 minute. All right, roll over there. Same idea on this next bar, nothing has changed. All right, a minute 15 out. This bar is looking better. Stay reasonable now. Come on, bulls. $50. Again, I wait for the bar rollover for continuation. I do not for reversion. $30 seconds. Range of this bar is still, it's reasonable, okay? As far as volatility, point range, and comparable or comparatively to the other bars. All right, 10 seconds here. Oh, come on. Come on, bulls, calm it down now. You need to pull back a little bit. Just inside. Just inside. The previous bar's body high. Inside of 30 seconds. I'm gonna hold off. I'm gonna hold off. That trade got ugly. Discretionary call. I think the bears are looking at that bar and kind of salivating as far as getting a better entry price. Not to mention that new channel that may be forming. What I'm looking at here, by the way, is this. You gotta consider all these things, obviously. Not a million things at once, by the way. But if you're gonna be a price action trader, just trade the price action. So when this gets put into place, I see that. And then I see the bears getting confidence. We see this wick pullback. I mean, that was a tight discretionary call, but I decided against it. Which looks to be the right move here. All right, here's the retest of the 20 on the 5. Now, I gotta tell you here. I mean, right? I'm pretty interested in this big channel here. Now, volatility-wise, it's actually not that big. I mean, it's 100 points. But that's just about right for me. For this ratio, so... we can see some nice channel-driven movement, then all of a sudden we have a whole bunch of little channel scalps we can take. Yeah, Chris was talking about opening range breakout traders. So, the opening range breakout, like a 15-minute opening range, fine setup. But what most traders who are trading that don't think about or consider is that there are there's really three kinds of days in the futures market. There's the two primary kinds of days, range days and trend days. And then there are the mix of the two, which we've been seeing a lot of, like last week we saw a lot of, which is big range, giant range days due to high volatility. And you get trends in between the range because the range is like 400 points wide. So if the market inertia is telling you, hey, we're seeing a lot of range bound days right now on the daily chart, which we're in like the first couple of days of seeing that now. Taking a opening range breakout trade with the momentum, looking for some big like 200 point move is not a great trade. I mean, right? Because you're asking the market to make a move that it hasn't been making lately. It's been very range bound. So you're asking the market to go against its inertia, which you never want to do. Now, if you're taking opening range breakout trades for 15 points, that's fine. Totally fine. But a lot of people bet on breakouts and they don't realize that 80% of breakouts fail. So if you're betting on breakouts with huge moves, you know, with a 1-to-1 reward to risk, for example, if we're not in a breakout market, you're going to lose. But yeah, if you're looking for smaller point gains, not like massive intraday trend trades, like 100, 200 points, totally cool. But you got to consider the market inertia, and most people completely overlook that for some reason. Well, I think the reason is that they just don't maybe realize that that is even a thing. It feels like a fairy tale. But the market tends to do what it's been doing until we see a slow, but sometimes sudden shift, and then it comes into itself in a different way. Like we saw, go from huge range-bound days to big trend days with the news, right? And now we're seeing the news volatility kind of fade, and we're heading back into range days. Keep your finger on that pulse. It's going to help you a lot, I think. Mark, many days you get a close outside the opening range and it immediately reverts into the middle of the range. Yeah, what does that tell you? We might be looking at a range day here, which needs to be considered. Because you can bet on breakouts all week and have it work. Go into the weekend, you're feeling good about yourself. Come Monday, all of a sudden, now we're heading into a range-bound market for some reason. Maybe the volatility of the news is fading. You do the same thing. You don't recognize that, hey, this is looking a lot more range-bound than it did last week. You start betting on breakouts, boom, you take 6 stop outs in a row. You wonder what the hell happened. Your confidence is shot. You should really be thinking about that shift, maybe 2-3 trades in max, and be thinking, okay, this is starting to look a lot more like a range day. Maybe I should consider that and start thinking more reversion ideas rather than big breakout 100, 200 point move ideas. You want the ask that you're making of the market to make sense based on what it has been doing. Yeah, Fred, listen, if you want to trade opening range breakouts, cool. But keep your finger on the pulse of the market inertia. It's a real thing. It's not a fairy tale. The market tends to continue to do what it has been doing until you inevitably see a shift. And each day you have to be thinking, okay, is this feeling like it's been feeling, or are we seeing a shift? In the last 2 days we've seen, well, in the last 2.5 days now we've seen a shift. But listen, guys, the reality is, if you want to trade that, again, totally cool. But don't go down the path of like, this is gonna save my career. It's just going to end up being one setup in your playbook. That's it. That's it. Don't overhype one setup. They all have problems. All that matters is, does it have edge? And setups don't really have... Let me rephrase. The setup isn't where most of your edge is going to come from. Most of your edge is going to come from being able to recognize market inertia, make changes quickly, and take setups when they're quality in the current market environment. So you will have a playbook of setups, but sometimes some of those setups are not going to work well. And you'll have to use the back half of your setups or whatever, because it's a big trend market. Then all of a sudden we turn into a range market. How much money you make depends on how quickly you can shift to the first half of your playbook and take your range setups. If you keep just pushing water while you're sinking and keep trying to trade trend breakouts in a range market, you're killing yourself. You want to have both, but you need to be able to switch. All right, still watching this big channel formation. See if we can get something here. I'm also, by the way, cool with continuation inside of the channel because it is about 100, 120 points wide, maybe 100 points wide. Retest of the 20 EMA and the 5 minute. So again, for context here, right now I'm really thinking about this channel as kind of our world until it breaks. It will probably break at some point here today. But until then, you gotta stay as dumb as you can. I'm trading reversion on the outskirts, outside tests, and continuation inside the range if there's room before the test of the other outskirt. That's it. BZ. Nico, bro, your channel changed my trading career, made me a legit funded trader. Glad to hear it. Very glad to hear it. Good work. You did it. I didn't do it. You did it. Now keep your finger on the pulse and keep that up. You know, in trading, it gets smoother, right? But you don't ever take your foot off the gas. You got to show up ready to go every day. Because it's really easy, and I've done it, it's really easy to come in and kind of just like, all right, another day, and you sit down and you're watching and you're like, okay, that's my setup, take it. And you miss something, and you're like, oh shit. It's about to stop you out, and you're like, I didn't even see, there's a very obvious trend line forming, and I just bought right ahead of that. Don't take your foot off the gas. It gets smoother, but show up ready to go every day. Yeah, Chris, listen, don't worry about the blown accounts. Just move on. Again, with your business plan, you'll still blow accounts. If you don't want to get into the headspace of like, if you're trading prop as a business model, don't get into the headspace of like, I can never blow an account. I think that becomes toxic to your trading, and it's going to force you to trade so timid that I don't think you'll max out your payout ability if you're so terrified of that. Don't just trade huge and blow them every week. But if you blow some accounts every 3 months, every 6 months, fine. Move on. Again, I think the bell curve, maxing out the bell curve of profitability in prop trading is willing to do that, to blow some accounts, but trading a size where that only happens once every, a few times a year, maybe 6 times a year, 12 times a year, whatever, depending on how aggressive you want to be. It's going to vary person to person, obviously. All right, well, ATR is coming down to about 30 now. I'd really like to see it maintain 30. That's the average true range of a 2-minute bar based on the last 10 2-minute bars. All right, this is a flat top, clearly, right here. Now close just outside of that, maybe 640. How much room does that give us? It's close. That gives us, if you consider rollovers of bars, if the trade takes a little longer than 2 minutes, there might be room there. There might be room there. I'm thinking about it. All right, 30 seconds out here. If we can see a close just above 640 on this bar, I would buy the rollover here in 20 seconds. It puts me in a little bit of a tight position, but that would be a trade for me. It would have to be near the high of this bull bar, though. Can't put in a big giant wick. And it cannot also be inside of that high wick. See what I'm looking at. Ooh, we closed just inside. Yep, we closed just at the high of the previous bar's wick. So I gotta let this new candle develop. Raymond, how do you determine overtrading and undertrading? Okay, I think my take on overtrading might be controversial, but it's right. Mathematically, it is correct. Overtrading is not a feeling. Most people think they're overtrading. Really, they just don't have edge. Is Caesar's Palace overdealing? Are they dealing you too many hands of blackjack? No. The more you play, the more you lose. Statistically provable. Now, if you have edge on every single trade that you take, 1,000,000 trades a day, then you should take 1,000,000 trades a day. Obviously, robots do that. All right, 45 seconds out here from the rollover of this 2-minute bar. Look at that. That's a big outsized bar. We just get a news headline. But if you have edge on every single trade you take, you should take every single trade. Now, if you're taking trades, but you're losing the more you trade, guess what? It means you don't have any edge, and you are overtrading. But if you're taking more and more trades, let's say you're taking 2 trades a day, and you start taking 10 trades a day, and you're making more money, guess what? You're not overtrading. You're just taking more good trades with edge. Now, undertrading is maybe a little tougher. If you're looking at your data and you have edge on all the trades you're already taking because you're making money, you're profitable, and there's really no holes or very few holes in what you're doing, like you're not losing a ton on one particular setup, then if you look at the charts and you're like, you know what, there's actually a lot more of these setups that I'm missing, then you're maybe undertrading. But that starts to become a question of quality of life. All right, so that came in for a test of that little ascending resistance point. We never quite got there. if you don't have edge and you're 50-50, then you can be profitable by having risk management being your edge. No. When you manage a trade differently, you change the probability of the trade, which is another thing that I think a lot of people miss. It's just, listen, your edge is you test something small, you look back at your data after you get a 50 to 100 trade sample size minimum. Really the minimum, the bare minimum I'd say is like 30. But 50, 100 is going to represent better data. You look at it, calculate the edge. Simply put, did you make money? Following all the rules every single time. This is more, the answers to these questions are more liquid than I think you guys are looking for. When you change the way you manage a trade, you change the probability of the trade. If you take a profit early at 20 points instead of 40 with a 40-point stop, the probability goes up. If you have a certain win rate at a 40-point take profit and a 40-point stop loss, and you start taking your profits, you're like, wow, I'll just take my profits at 45 points and cut my losers at 40 points. Your win rate over time will fade down a little bit because the probability changes. That's what a lot of people miss. So really the edge comes from having good management, but entries is really where the edge. Entering when the probability is 55-45 or even 60-40, not 50-50 or 51-49, which it is for most of the day. There are little windows when that probability shifts. And obviously, I'm only taking a few setups of that. There's a million different ways you can find those little probability shifts. And I'm not taking anywhere near all of them. Nobody is. But you just have to find your little corner where that window opens for you, you enter, and it works out for you long term. That's having an edge. And I know that all your eyes are glazing over right now. Why aren't you talking about Lamborghinis? Because that's the backside. The money is the fun is, well, the money is just the byproduct of good trading. It's the carrot to dangle. Okay, so we have a Fed speaker at 11 Central Time, and then remember, Powell speaks at 12:30, so we're pretty clear here for the next at least hour, maybe hour 15. Now, you can see here. We'll just make a slight adjustment. Don't overthink it. And I can see that this is starting to become a point of interest. So we're starting to form maybe a smaller channel inside of the channel. So I want to see one more test of that. And if that plays out, then all of a sudden that channel becomes tighter than it previously was. Which is not great for continuation, but good for reversion. All right, here we are. We're getting close to a downside test. That 20 EMA is lining up both on the 5-minute and the 2-minute. It's a little high on the 2-minute. That's okay. That trend line, and we'll see if that trend line can hold. Well, ATR is now at 27 and a half. I'd like to see that hold. I mean, you see up top here that teal flag at the bottom kind of hiding behind that 16. That's the average range of the last 10 2-minute bars. 27 and a half points. So it's not large. Again, I prefer to see between 25 and 70. Below that, it does start to get a little more difficult, but it's still workable. A lot of different trade ideas right now. I just need one to play out, and I will take it. There's continuation inside of either channel, really. There's the channel itself, reversion. There's a breakdown side through that newer developing trend line. Still inside of the bigger channel. There's 3 or 4 different ideas right now that I'd be cool with. All right, the close of this bar is important, but it's important for the rollover of the next bar. So I will be back in 2 minutes before that next bar closes. What? Got a little shooken up, huh? See if we hold this channel here. That's really what I'm watching. Get this newer, tighter channel, that is. All right, a minute 10 left on this bar. We're coming in for a test of the true bigger range. You see, we keep pulling back to that 20 EMA on the 5 minute and on the 2 minute for that matter. Old school, what stopped you taking that 3-bar reversal in the channel? This one here, I presume. We're coming right into the 20 on both the 5 and the 2, and we had that smaller trend line right in the way. A lot of things right in the way there. Being that we are in this ascending channel, I would really only require 2 clean bars, bull bars, for a continuation sequence. If we can get this one closing near its high, get a rollover, push higher, and close above this wick here. That'd be a beautiful setup. Plenty of room for the upside, that is. So 45 seconds out from the close of this 2-minute bar. Scrumptious says, do you trade pre-market afternoon the same way you trade the open? If I am going to trade futures pre-market, really outside New York at all, it's going to be a lot more range trading than it is continuation, just because volatility is going to be tighter on average. And the afternoon tends to turn into more range than the morning session. However, if there's continuation setups in the afternoon, I will still trade them. Just percentage of trades is going to be a little bit higher on the range side in the afternoon compared to the morning for obvious reasons. But yeah, very similar. All right, there we go. There's a nice bull bar. A minute 45 out from the close here of this bar. If we can get a nice close, honestly, right between like 45 and 55. That's what I'm looking at. Obviously, I don't want to see a big old back wick on the bar. But this is the 10 a.m. bar, so that top of the hour volatility is kind of out of the way already. All right, a minute 10 out. Pulling back here inside of the wick of this wick bar here. See if the bulls can show some backbone. "35 seconds. Really watching that 2 minute. Come on, bulls. Just weak. Just weak. Everything you get just falls apart last second. Come on, can they step in here? We got 5 seconds to clean this up. Yeah, there's the rollover. Same idea applies if we can get a cleanup bar, by the way. I'm interested in the bottom end of that channel, by the way. I would probably make an adjustment and draw it kind of like... I mean, that really makes maybe a 5-10 point difference. Coming into 6, maybe? I'm watching there. You can get a nice, clean, controlled test. That's a trade worth putting on for me. No entry yet. Big wicks. Big bizarre wicks. 15 point pop in a second. Little retest there and I would enter long. Again, I don't like to put out limit orders for reversion because oftentimes you get big giant dumps on news or pops for that matter if you're looking to short and boom, instantly stopped out and you give away an R for nothing. So I like to do it manually because it helps you avoid those. We saw one of those yesterday, actually. Some people got trapped in that. Well, I'm ready to go here. I'm ready to buy that test. All right, there we go. I will buy that test. So I am now sitting long, okay? Average at 18,610.75. Stop down at 18,570.75 and take profit up at 18,650.75. We'll see if we end up rolling over here, breaking this channel. But I'm cool getting long there to break the ice here today. Volatility is a little bit down, so I imagine this trade, unless we get some kind of news headline, is likely to take a little bit longer than my average, which is totally fine. All right, well, there's the attempted break of that little trend line. We'll see if that ends up having to be an adjustment or if that ends up having to be a break retest, and then the retest becomes important for us. There was a test of 18.6. Tier 3 level, not too concerned with that level there. Sitting about 15 points in the red as it sits right now. Coming upside here for maybe a little retest that trend line. We'll see if we can get a little push. Back to green on the trade here. Coming in for a retest there of that trend line. All right. 5-10 points in the money. $15 points in the money. Again, target here is up at 18,650.75. That 650 is a tier 4 level. I'm not concerned with that level on its own. 20 points in the money. And about 22 points in the green so far here. Just let it work. Let it do its thing. $25 points in the money. Again, target here 18,650.75. There we go, 30 points in the money. We'll see about 10 more points here. There's the rollover. Yeah, 25 points in the money as it sits, 30 points in the money. In a little bit of trouble here around 18,640. That's okay. Eric, when will you put your stop at break even? I don't do that trading channels like this. Listen, it's a psychological, and maybe this trade turns around, stops me out, fine. It's a way to protect yourself psychologically, And if that does that for you, then great. But it's going to decrease your win rate. You're going to end up with a lot of scratches. So if you need psychological protection, that's cool. But it doesn't, in a lot of cases, sometimes it does, but in a lot of cases, it doesn't actually improve your stats. It just makes the roller coaster feel less crazy. I mean, that's the truth. It doesn't make it the wrong move. It just makes it a move. All right, still about 17, 18 points in the money here. Just need to see a test upside of 18,650. 75, just a little move through 650. $25 points in the green. $30 points in the green. Seen a little bit of a flat top here around 642. You guys know how I feel about flat tops. All right, need about 5 more points here. 650.75 is target. We did break that little flat top. Not quite enough follow through yet. See if we can get that little push. Again, 650 itself is a tier 4 level. I'm not really looking at that level on its own. A few more points here. Let's see if we can get it. Another pullback. All right, 22 points in the money as we currently sit. 25 points in the money. A lot of wicks here in this region. A lot of little dojis. Just need to see a little bit of an improvement up top. And we're inside of this big wick here, which I'm cool with. Pulling in a little bit here. That right there is pretty much a back test of the previous trend line. Though it's not too much of a trend line anymore. All right, there's break even on the trade. Few points in the red now. Yeah, Powell speaks at 12:30. Still a few hours away. All right, so we're sitting 10 points in the red, 12 points in the red. We got within 5 points of our stop, so let's see if we can, I'm sorry, not our stop. We got within 5 points of our take profit, up to 35 points in the money. So let's see if we can get a curl back upside and actually make a true test of that 650 region. All right, back in the green on the trade, 5 points in the money. Okay, so the bulls are actually holding the 5-minute 20 EMA, and this is the test of the 20 EMA on the 2-minute, which is slightly less relevant. Actually, quite a bit less relevant. So we are 14 points in the money on the trade right now. Again, take profit up at 18,650 and 3/4. Trade kind of taking its time, huh? Which was expected, by the way, in this volatility. So again, we are holding that 20 on the 5. Trying to push through the 20 on the 2. Again, less relevant. Currently 13 points in the green. All right, there's 20 points in the money. 25 points in the money. Pulling on back. 5 points in the green. You can actually see we're forming, if you look at the zoomed in time frame, like it seems like we're forming a little bit of a wedge. Which is fine. I mean, we're break even on the trade as it sits right now. Keith, is there a limit to how long you'll stay in a trade? Yeah, I mean, listen, if things really, really change, which they are changing a little bit, but not enough for me to just take it off. I think that would be an emotional decision. Yeah, I mean, there's a point where if things really change, I'll just flatten and move on. But we're not at that point. $15 points in the green as it sits now. $20 points in the money. 25 points in the money. All right, 33 points in the money. A few more points here, and we will be out at our 18,650 75 take profit. Ain't over till it's over. There we are. Out there, let me flatten. And we are flat, fully out there. Make sure we're flat. And this is where we currently sit. So we're up just under 2,000 so far on the day. Market finally gave us something here. Let's see if we can pull something else out of the market here. I think we got some pretty good fills actually on that trade, because that's a little higher than I expected my risk reward to be. I was thinking it would be more like probably 1,800, but there we sit. 1968 so far on the day. Let's see what else we can grab. This is a big bull bar, huh? Yeah, that's a big outsized bull bar. You can see we're actually breaking, attempting to break this wick, which is good to see. Kind of revert to that channel mentality, perhaps. We'll see. Exposed. How much do you recommend I attempt to make each day for take profit? 25K goal, 25K goal, 1.5K. Are you talking the test, or are you talking once funded? That changes things. Look at this. Finally, we're getting some good volatility bars. This is a beautiful thing to see. Now, if you look at the 5-minute here, zoom in. This shows pretty well, actually. Keep an eye on this, but these aggressive ascending channels, they tend to not hold or be relevant all day, because as volatility comes in, continuing to make upside tests, you're asking for volatility to really, really hold up. So we'll see if that gets a test, but I wouldn't count on it. Exposed eval, yeah. So, well, you can take a few different approaches. You can try to make 300 bucks a day for 5 days, right? Or you can try to make 750 a day for 2 days and then flip 3 days. I've usually done the latter. Yeah, this is crazy. Look at this volatility. I'm not even seeing a headline here. But I can't complain, because we were starting to get a little bit of range bound, like low volatility range bound with a lot of dojis, a lot of wicks. So this is good to see. Well, while this move makes something of itself, I'll be back in 2 minutes. All right, we are back. We are back in this move. Did it make something of itself? Not too much yet. Eric, if I had held on, I'd be very, very green on the day. Instead, green on 2 accounts and red on 1. Don't think like that, Eric. It's dangerous. It's a fallacy. I mean, everyone always says, oh man, if I had done this. Listen, by 8:31 a.m. Central Time every single morning, had you bought a specific call option the night before, you would be very wealthy this morning. You can say it about a million different things. So let go of that. Just get your peace and move on. Every minute of every day, essentially, you're missing out on life-changing money. Well, this 5-minute bar here has basically round-tripped, wicked its way back down to the open of the previous. So this bar here is going to be interesting on the 5-minute. Ooh, got some allergies going today, man. Is Apex a funded trading platform? Yes, they are. Currently trading 7 of their funded accounts. Which, by the way, 80% off there is back. That came back just yesterday. We've been waiting for that to come back for a few weeks. Use code BIG, you get 80% off. And single day pass. Would you take this 3-bar reversal with the doji in the middle? Well, I'm looking at this region. Okay, this is like a little bit of a flat top. We saw this just barely close outside. We'd be coming back into the close of this big bar. I haven't seen any headlines, but I'm very curious why this just occurred. So in a normal environment, yes, I would. In this particular environment, I think I gotta hold off there. Kings, I held a long open after market close on NQ yesterday for it only to open back up with a gap down, totally disregarding my stop right under that flat bottom low. Took a big hit after it closed me out. Yeah, you know, if you want to trade futures overnight, you know, be my guest. There's a lot of ways to make this work. I personally have a deep-rooted distrust of markets in days and weeks. So that doesn't mean I don't necessarily trade that, but I'm huge intraday. Very big on trading intraday. Very big on long-term buy and hold, like just betting on America mentality. And then like in between, like a few weeks, I want to make sure that I have some kind of built-in edge, which is why I'm so heavy on 2 to 6 week out net sell option strategies. Did you explain the gap down when the market is closed? If there was no trading, what happened? It's just where the price opens up the next day. So there's a balance coming into the open. And whatever people are willing to pay, where they meet in the middle, buyers and sellers, wherever they meet in the middle is where it ends up opening up. Yeah, listen, Kings, you can trade futures overnight. People make a lot of money doing so. It's just, I'm just saying for me, I can't really get over my deep distrust of putting my trade. Now, we're still doing this intraday, but at least I'm in control intraday. I can stop myself out if Trump says something. But that doesn't just go for Trump. That goes for the NVIDIA CEO. That goes for Elon. That goes for a million people. I'm not really into putting my fate in the hands of some other guy or woman who can just on a whim come out and say, yeah, we should be honest with our shareholders. And they come out and say, yeah, NVIDIA's not going to do so well next quarter. And now I'm screwed because they made a decision. I'm not into that. Not to say that you can't make money doing it. You absolutely can. But my personality type, I can't do it. So net sell option strategies just put me in the driver's seat because options are quote unquote rigged short-term options, especially in favor of the seller. Because if they're not, then you don't have a market because the seller's providing you massive leverage, which is why you can make so much money on very short-term options, but most of them expire worthless. There has to be a trade-off here. What is the seller getting? Well, the seller's getting edge. The buyer's getting leverage. That creates a market. All right, well, here we are fading that little move here. We're really kind of struggling around the close of that first big bull bar that we saw here. We'll see what the market makes of this. just waiting here for the market to make some kind of decision around the close of that first big bull bar. Yeah. Old school, you are correct. There's a bit of a flat bottom there around the close of that first big bull bar. So we'll see if we can get a downside break through that and the 20 on the 2. Alright, attempting to break that flat bottom here, but we are now coming right into the 20 on the 2. If we can break the 20 on the 2, then I'm paying attention to the 20 on the 5, which is more relevant than on the 2-minute chart. But a downside break of both of those with a continuation sequence, I would be getting short, if we can see that. Got a big old flat bottom down here. You look at here, whole lot of stops that I'd love to be able to hunt. We'll see if we get an opportunity to do so. All right, now 20 EMA on the 5-minute is sitting at 645, approximately. So I'm watching that, but again, it closed below there as well. Then that puts me in a stop hunting mood if we can get a nice continuation sequence for down in this region. I can get my target sitting right around here. That would be a beauty. Coming in for a test of the 20 on the 5. There we go, there's the test. Bulls really holding on to that 20 on the 5, at least attempting to. Wick kind of back up right from that level. See if the Bears can take hold. I didn't see a single headline that would have reasonably caused these two bars. Did I miss a tweet or something? Do you guys know what happened? I mean, really all that I saw was Putin was talking about space. That was about it. All right. As we speak, testing the 20 on the 5-minute here. You can see that. We get a Fed speaker in 15 minutes and then Powell at 12:30. Did you see my message? Atlanta Fed already spoke. I believe we're getting Cleveland at 11, aren't we? Yeah, we're getting Cleveland at 11. But again, don't expect a ton of volatility unless they start mentioning tariffs. More volatility is likely to come from tariff talk out of Powell at 12:30. So I'd pay attention to that. All right, a minute 35 out here from the close of this 2-minute bar. The Bulls coming in to try to wick that back upside. Here's where we currently sit. Waiting to see if we can grab something else here. Again, now we are retesting the 20 on the 5. Bulls wicked it right back up to a respect of that. You can see that here. We'll see what they make of that. Again, the beauty of take profit is you can take daily payouts. But the beauty of Apex is you can pass in one day and get 20 accounts. So take profit right now, actually they both have good deals. It's kind of tough to decide when they both are running deals like this. They become pretty similar. Take profit is 30% off, no activation fee with code BIG. And with code BIG at Apex, it's 80% off and single day pass. Which means you can pass the eval in one day. One trade, really, if you want. All right, 40 seconds out from the close of this 2 minute. We end up getting here. Kind of holding on to that wick of the previous bar, the bulls are. About 5 seconds here till the rollover. Yeah, nothing there. You see that? We get a close here. We get a close inside of the wick of the previous bar. That tells a story, believe it or not. It seems like a small difference, but that tells a big story. ATR now at about 25, by the way. Your 20 and my 20 on the 5 are at completely different levels, like almost a 10-point difference. Are you running an SMA or an EMA? I'm running a 20 EMA. Bears trying to take it lower. Remember, probably a whole lot of stops loaded up in this. It's going to be a wide range. Probably a 20-point range of stops. Well, at least 15. Which can make the move through a little less clean. But there's going to be some stops there. But you also have to consider that there's going to be buyers willing to step in that region too. So it's all about balance, right? Bull stepping in a little bit here ahead of that level. If you guys haven't yet, please press like on the stream. I appreciate you doing so. It helps out a lot. See if these bears can put these bulls to sleep. Look at how many consecutive bars we have. Now we're looking at 9. All right, coming into that level here, kind of that region of stops. It's a flat bottom, but it's more like a flat range. A minute 37 out from the close of this 2-minute bar. Bulls wicking this back up. A minute 5 out. Well, yeah, Zachary, that would be the plan here if we can see a clean move. But Bull's trying to break this 9 or, what is it, 8? 8 bear bar losing streak. See if the Bulls can pull it off. A bit of a wick back upside there. Hold off, see how this next bar develops. The last of these stops really get taken out maybe 590, 585. Here's the test of 18.6. Tier 3 level. Not too concerned with it, but people are going to be paying some attention. All right, now here, again, you're going to have a little bit of a battle going on between bulls stepping in at this flat bottom and some stops getting triggered. It's a wide range, so you end up with a little bit more of a battle. When it's a really clear level, like high or low of day, those stops are kind of more condensed, I guess you'd say, in one little area. Here you have more of a range. You end up with a battle of bulls buying that low and stops getting triggered. All right, Cleveland Fed is going to be talking here in about 4.5 minutes. Again, I'm not too concerned with it unless we get a few tariff headlines. Powell is the bigger story here today, 12:30 Central. See these bulls wicking it back up. There's the beginning of an attempt at a reversal sequence, by the way, out of the bulls. They're trying. They wick that bar back up. A lot of people would call that like a shooting star doji. Whatever. Either way, that's the beginning of an attempt at a reversal sequence. Doesn't mean it's going to succeed, by the way. It's very early. So if the bulls get disappointed, then that tells another story here. Meaning if we take out the low of this bar and close near the low. You can see we held that bottom right there. Last of stops go out 585 to 590. All right, 35 seconds out here from the close of this 2-minute bar. Let's see if the bulls can break that streak. They're trying to trigger that little reversal sequence. All right, roll over in 10 seconds, that is. Interesting. We got to close. You guys see that? Right at the open of that previous bar. Bulls hesitating a little bit. This is all very down in the weeds, but it's information that's important if you're going to be a price action scalper. That trade we took earlier, a lot of people would say, oh, that's more of a day trade. Yeah, I'd call anything less than 30 minutes still a scalp. That's my opinion. And then there's micro scalping, which is usually same bar on a 2-minute chart, which we were doing quite a bit more of last week. Remember, last of these stops goes out at 585 to 590. There's the last of those stops. You see that? Oh, goodness. These bulls are getting very disappointed, just wrecked. The glimmer of hope, and then we close at the open of the previous red bar, and that reversal sequence just goes out the window and takes out these stops. You guys saw that happened, right? That's why I like to implement stop hunting into my trades when I can. Ideally in the back half toward a target, which means you got to be thinking about that before you enter. Didn't get a great continuation sequence to do that here, though. All right, we're getting some headlines out of the Fed speaker. It's the Cleveland Fed, by the way. Just talking inflation policy right now. Go ahead and clean up my charts. Don't need that anymore. Really don't need that anymore. Bull's trying to wick this back up inside the range of that previous bar. Cleveland Fed just started talking, so we're getting headlines. We might see a tariff headline or two. So be aware. Nothing on tariffs yet. Couple tariff headlines, nothing really volatility driving out of the Cleveland Fed here. Just saying it will take time to gauge the impact of tariffs on the economy, buying time, as the Fed loves to do. The Fed likes to buy time. That's really their job, because the longer they can push off an answer, the more likely it is they can end up looking right in hindsight. And that's really the Fed's job, is to look like they know what they're doing so they can stay in office. Okay, so a lot of headlines there from the Cleveland Fed out of the way. So I'd imagine the highest risk of volatility from the Cleveland Fed is probably past. Powell at 12:30. Make sure you remember that, 12:30 Central. His first couple statements on tariffs will probably be the most volatile, and then it'll fade from there. Well, that's where we currently sit, guys. You guys know what I'm looking for, right? Little channels, but right now I'm looking more for continuation here. See if we can get that. There's really not a channel forming. Though as we go lower and lower, like you see here on the 2-minute, we may start to see this widen out into a little range, right? Very common. We saw that earlier here today. But listen, as of yesterday, it's back. Apex 80% off. We've been waiting on this for weeks. Use code BIG. That'll give you 80% off, and you can pass the eval in a single day. and be trading in a funded account as early as tomorrow. But if you prefer daily payouts, Take Profit Trader is 30% off and no activation fee with the same code BIG. All right, guys, I'll tell you what, subscribe to the channel if you're new. I am live daily, 15 minutes before the market opens. That's 8:15 a.m. Central Time. All right, guys, hope you have a good rest of the day. Trade well this afternoon. Let the market give it to you. Don't force anything, and I'll see you tomorrow morning. All right.